Ladies and gentlemen, good day and welcome to Rajshree Polypack Limited Q1 FY24 earnings conference call hosted by Prabhudas Lilladher Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Stuti Deria from Prabhudas Lilladher. Thank you and over to you, ma'am.
Thank you. On behalf of Prabhudas Lilladher, I welcome you all to the Q1 FY24 earnings call of Rajshree Polypack Limited. We have with us the management represented by Mr. Ramswarup Thad, Chairman and Managing Director, along with Mr. Sunil Sharma, CFO. I would now like to hand over the call to the management for their opening remarks, after which we can open the floor for the Q&A. Thank you and over to you, sir.
Thank you, Stuti. Good evening, everyone. I welcome you all to earnings calls of Rajshree Polypack Limited for Q1 FY24. Joining me on the call is Mr. Sunil Sharma, CFO. We have already uploaded the investor presentation and I hope that everyone got the opportunity to go through the same. For Q1 FY24, the company has achieved a turnover of rupees 72.69 crores as against turnover of 68.3 crores for the corresponding quarter of the previous year, thereby achieving a growth of 6.4%. The EBITDA of the company stood at rupees 8.73 crores for the Q1 FY24 as against rupees 10.82 crores for corresponding quarter earlier year, resulting in reduction by 19%. At the same time, the company earned profit after tax amounting to rupees 2.1 crore for Q1 FY24 as against rupees 4.76 crore for Q1 FY23, thereby reporting a fall of 55% over previous year. PAT margins for the period stood at 2.9% of sales against 6.9% of sales for the corresponding period earlier year. Looking at the sales, while the sales volume for the quarter went up by 16.67% as compared to Q1 FY23 from 2,800 metric ton to 3,275 metric ton. The same was majorly offset by lower realization on account of lower raw material prices. Further, the raw material prices drop also had significant impact on the profitability of the company, with the EBITDA margins dropping from 15.8% for Q1 FY23 to 12% for Q1 FY24. In terms of product-wise sales, while the sales of packaging products went up by 11.88%, from 47.16 crores to 52.76 crores, volume growth of 27% and a price degrowth of around 15%. We saw a drop of about 16% in the sales of sheet from 19.75 crores to 16.6 crores, where there is a volume degrowth of 4% and price degrowth of almost 11.5%. The export revenue of the company went up by 3.5 times from 2.17 crores to 10.3 crores. Here I wish to highlight that generally Q1 is the best quarter for the company in terms of sales, where the company generally maintains higher inventory right from the beginning to capture maximum demand. However, unseasonal rains had a direct impact on the sales coupled with a quick drop in raw material prices, thereby impacting the profitability of the company. While the demand growth in the key product segments remain muted, the company is expecting better offtake of barrier products with the start of festive season. Further, the export demand of injection molding product is stabilizing and the company is working to capture more market for the said product range. Looking at raw material front, the prices are currently stabilized and range bound, and hence we expect our profitability to improve during remaining part of the year. Looking at the key expenses, the employee expenses saw a growth of 12.8% over Q1 FY23 on account of annual increments as well as manpower to support increasing production at Unit 1. Increasing power consumption coupled with higher power prices at Unit 1, Sarigam, led to power and fuel expenses going up by 26% as compared to corresponding quarter during previous year. Further, the job work expenses had gone up by 2 times on account of increasing production and sales of injection molding products under toll manufacturing agreement. Barring the above expenses and freight outward, we have been successful in managing all our costs prudently with marginal increase. The finance cost of the company went up by 66% from 1.28 crores in Q1 FY23 to 2.13 crores for Q1 FY24. The said increase is primarily fueled by higher utilization of working capital limits followed by increased term loan interest. Further, the depreciation also has gone up by 21% from 3.16 crores to 3.8 crores for the period. Here it will not be out of place to mention that your company has invested a cumulative sum of around 105 crores in last 4 years in building more and more capacities to cater to increasing demand coupled with newer and better technologies. As a result, while the sheet extrusion capacity of the company has gone up by almost 80% from 10,200 metric ton to 18,200 metric ton per annum, the thermoforming capacity also has doubled from almost 4,320 metric ton to 8,770 metric ton per annum. At the same time, the printing capacity has increased by 51% from 62 crore pieces per cups per annum to 94 crore pieces per annum. Such an investment coupled with higher fixed cost and working capital requirements had an impact on the overall profitability of the company in short run. However, it is time for us to consolidate our operations now and before taking any major leap and reap the benefits of this investment with increasing sales and profitability in near future. On product development, I would like to share that your company developed and introduced 8 new products within the quarter, with aggregated product base now stands at 200 plus products across food packaging sector. We served close to 500 customers, both domestic and international, during Q1 FY24, adding 79 new customers in this particular quarter. The new customer includes addition from injection molding sector, 8 customers and 15 customers from barrier packaging segment. Speaking on the marketing, we participated in the exhibition at Chicago in US in the last quarter, which gave us a good and encouraging response. The company is working hard on converting such a response into more export sales in near future. Our ongoing project of sustainable packaging products under Polypack is coming up well and the construction is on schedule. Further, we have already placed order for various machineries with advance payments and machineries should start arriving in the factory by October end. With this, we expect to commence commercial production by end of December 23. We have invested a cumulative sum of rupees 16 crores in Olive till date, in which 7 crores have been invested in Q1 FY24 alone. At the same time, we have also achieved financial closure of the project with the first disbursement of term loan from the lenders. We shall keep you updated on the progress of the project from time to time. With this, I would like to invite your questions to you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all participants, you may press star and 1 to ask a question. Our first question is from the line of Mahesh Attal from Atal Advisory. Please go ahead.
Sir, congratulations on a good set of numbers, and thank you for taking my question. So my first question would be this Olive Eco-Pack thing. Just now you said that it is into sustainable packaging products. So what kind of products will be coming out of this, and what is the end user industry to whom you will be selling this product? And what kind of synergies you will get from the existing clients that you have? Are you going to sell this product to your existing customer, or you need to work upon getting new customers for this completely? Second thing would be and also on the scalability of this project, what is the revenue potential of this project entirely, and what is our share? I think the JV share is 51, if I am not wrong. If you can just elaborate.
Yeah, it's around 50.1.
Yeah. So if you can just elaborate, what would be the revenue potential on a complete basis? I mean, I'm talking about entire working shift. So if you can just please elaborate and give some time on this.
Yeah. Thank you, Mahesh, for your question. Olive Eco-Pack basically will be making products made out of paper, and this will be used mostly by quick service restaurants and food delivery in food deliveries. So it is sustainable because 95% of the component will be paper, and we will be using water soluble coatings. So this will make the product sustainable. In terms of the overall top line, what we can achieve on full scale production will be in the range of 220 to 230 crores from this particular project, and we expect to scale it up gradually over a period of 2 to 3 years to achieve this particular top line.
Sir, if you can just please give me the margins on this particular thing, and if I look at your financials, pre-COVID, we were able to do 20 plus kind of margin. I'm talking about the EBITDA margin. So do you foresee that we can reach that particular thing? And if I want to take, if I want to add the current business and the olive business, and then if I want to see the financials, what could be the sustainable EBITDA margin going ahead? Where do you see the margin in a sustainable bracket? I mean, at any quarter level or yearly level, if you can please give light on this.
Margin, I would say 14% plus minus 1% range will be operating. As we see pre-COVID level, and what has happened over the 5 years is basically the prices of the raw material has increased by almost 40 to 50%. So what has happened, the base has shifted. Our margin in terms of EBITDA per kilo is constant, more or less. So when we see in terms of percentage over the overall revenue, it looks down. So that is one of the reasons. And in overall sense, I will say will be in that particular range bound will be there.
Okay. Also, sir, is there, as I queried you earlier, the synergies that we have from our existing clients in this particular business, are there any inquiries coming from our existing clients for this olive thing? Or you need to go and search and look for the new clients completely, because you said QSR, right? So rather than QSR, we are also doing this Tata Gluco thing, and we are also into Epigamia and all those things, I guess. So are those companies do those have any products where they will be requiring this product? Are you in touch with them?
Yeah. So what happens, they have different businesses, like Tata's have different businesses which are into coffee and QSR. Similarly, I would say Devyani International, they have businesses into different formats. So we have some customers who are common, and apart from that, there are customers in the export market which are they are common, and they buy the similar range of products. And in domestic market where we sell material through our distribution network, there also some customers are common. So I will say around 50 to 60% of the customers are common, and probably 30 to 40% will have to look for new customers, which we are already working on.
All right, sir. Thank you and all the best. I have further questions. I'll join in the queue.
Thank you.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Anant Shenoy from AS Capital. Please go ahead.
Good afternoon. Am I audible?
Yeah, very much, Mr. Shenoy.
Hello. Good afternoon, sir. My first question is on barrier packaging. In the last call, you had mentioned that there is there is more customization, validation that happens in the barrier sheets. So can you talk about that, what extra that happens in the barrier packaging? What customization the customer has to do, or is there anything different versus the ordinary sheets that we sell?
Yeah. So good afternoon. First of all, in barrier packaging, what happens, this is being used where we have to increase the shelf life of the food. So when we talk about validation, so the customer, when they do the trial, they keep the packs for 2 months or 3 months, depending upon the shelf life, what we are looking for that particular product. And hence, we say it takes a longer time for validation in barrier packaging. So it is directly related to the shelf life of the product, what the customer is looking at.
And can you talk about any breakthroughs, any client wins? Because you have mentioned there are 15 customers, and last year we saw a good growth. So, any big client wins that we have this quarter in the barrier packaging?
In barrier packaging, we have added customers. I will not like to directly disclose the names, but definitely we have added 15 set of good customers in this particular segment. Unibix, maybe I can name one. Unibix is one we have added.
And okay, and now if you see this quarter, the sheet sales have been come down. So what is the reason for that? And is barrier packaging, the sheets are counted in the sheet sales part, is it?
First, I will answer the question of the sheet sales. If you see in terms of volume, there is only 4% drop. The major drop is only due to the change in the raw material prices. So that's the for the overall sheet sale. And barrier packaging, we sell sheets as well as we sell products both. So the sheet will go into the sheet sale and packaging will go into the packaging category.
And roughly, what was the barrier packaging sales this quarter?
For the full year, last year it was around 20 crores. Quarter 1 this year we have sold around. Just a minute. Just give me a minute. We have sold around 3 crores in this particular quarter. So quarter 2 and quarter 3 is basically the period where we get the maximum sales for barrier when the festive season starts.
Okay. And my next question is on this one. In the annual report, there was an advance from customer of around 16 crores in the other current liabilities. Can you talk about what is this advance that we have received?
Yeah, basically one of the customers have provided us a long-term finance for investing in few of the machineries to meet their demand.
Okay. So this is for sheets or packaging or both?
Packaging products.
Packaging. Okay. So this will be used for capacity increase,
capacity increase, yeah.
So is it part of the capex that for this year or like how?
We have done already. The capex has been done last year.
Last year, okay. Okay. And you had mentioned that this year we have targets to reach 300 crores in the standalone basis. So do we have that visibility, or are we on track to reach 300 crores this year?
We should be in the range of 285 plus minus 5 because the raw material prices have dropped drastically. So volume wise, if we see, we'll achieve those numbers.
Okay. Okay. And any plans to increase the injection molding, that toll manufacturing?
Yeah, we are definitely looking at different avenues and working on various aspects to grow the injection molding segment in the coming quarters, I will say.
Okay. Okay. That's all from my side. Thank you.
Thank you.
I'll come back in the queue.
Thank you. Our next question is from the line of Gurjot Aluwalia, who is an investor. Please go ahead, sir.
Yeah, good afternoon.
Good afternoon.
So first question is around the EBITDA margin guidance. Because on the earlier question I heard you say that raw material prices have gone up 40-50% in the last 4 or 5 years, whereas the margin on EBITDA per kg metric is more or less constant. So this tells me that there is no pricing power, and like with time and with inflation, raw material prices will only keep going up. So by this logic, companies' margins will keep coming down if the EBITDA per kg margin is going to remain constant. So can you just clarify what you meant by it?
Yeah, see what happens generally, the companies give the escalation on the raw material prices and the escalation into the direct costs. So the overall margin, net margin more or less remains constant, I will say. So we saw unprecedented increase in the prices of raw material post-COVID, which has gone up by almost 50-70%. It has again recorrected in last 3-4 months. So we don't foresee such scenario to, like, of course, 5-7% inflation point of view, the raw material prices will keep on increasing year on year. That is correct. But we will also work gradually to see that if we are working in fact to remove the products which are low margin products and to add more products which are giving us the higher margin, and that is where we will try to improve our EBITDA percentages.
Okay, but as of now, company is not able to escalate the price on the products.
Raw material changes we are able to escalate. But when we say we want to increase our margin, that will come over through volume and through the product mix.
Okay, got it. So overall EBITDA margin should remain 14% plus minus 1, like you said.
Yeah.
Okay. Then secondly, I wanted to check on the GST subsidy benefit of the 1.5 crore, which impacted profitability in the last year. So any update on that?
So we are left with around 7 or 8 crores still lying in the credit in that particular account. So we are expecting that around in 4 months we'll be able to consume that credit, and then we'll be able to start using that GST subsidy benefit.
Okay, so that will reflect in the profitability in the next couple of quarters.
Yeah, maybe after 2 quarters should reflect in our profit.
Okay. Then the next point, in the last few days, company has made like number of disclosures to the stock exchange about some order wins, right? But total value of these orders is like hardly 6.5 crore, less than like 3% of the annual revenue. So I'm like wondering why suddenly these very small value of contracts are being disclosed to the exchange. Is there some new exchange SEBI regulation or something, or anything special about these contract wins?
There are certain new SEBI guidelines which has come, and due to which we have to declare certain, based on those guidelines, we have to make certain disclosures.
Okay.
Yeah.
Yes. Okay. And just one last question. This is purely from a minority shareholder point of view. So company has completed like 5 years since IPO, but it has not generated much shareholder value, right? So while company has grown in these 5 years, doubling the capacity, doubling the top line, accounting profits have remained absolutely flat. And you also talked about going forward, I think the company wants to reap the benefits of the investments it has made. So what is the outlook on the like profit growth for the next 3 to 5 years? Because like just growth in top line has not resulted in benefit for the minority shareholders.
Yeah, I agree with you completely. So as I mentioned in my speech that we have been continuously investing over a period of 3 to 4 years. So so what we are looking now is to consolidate this and see that we increase another 10 to 15% in the top line where our all other expenditures remain constant. That will definitely help us in improving our bottom line. And we should see definitely the profitability coming in next 1 to 2 years, a significant improvement in the profitability in next 1 to 2 years.
Okay, and any guidance in terms of like expected growth?
So I will say like even of 50 crore into the top line should help us in improving our bottom line by around 7 to 9 crores roughly.
All right, perfect. Thank you very much and all the best.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Mahesh Attal from Attal Advisories. Please go ahead.
So thank you for taking up my follow-up. So I was just going through your financial. Just wanted to know on a sustainable basis, what would be the material costs, a percentage of the sale? What could be the material cost in our business? And is the employee cost, as you said in your opening speech, that you have already given the whatever increments and all is done. So can we assume that the employee cost in our business and other manufacturing costs remain constant and they will not increase with the increase in turnover, so that leverage comes into play? So just wanted to know how exactly. Just now you have in your the earlier participant you have told that the 50 crore in the top line will add to 9 crores in the bottom line. So do you see a greater operating leverage coming into play from here on and in the future?
Yeah, I'll start with the material cost, which is generally in the range of 61 to 63%. So when we say the other costs like interest, depreciation will remain fixed because we are not going to do any major capex in this segment. So with respect to direct cost, which is related to power and labor, that cost there will be a marginal increase, but all other costs like admin cost will remain fixed because we don't see any increment happening. In fact, we'll try to further see wherever we can reduce the cost, and we are working on those fronts.
So as we speak now, do you see the raw material costs coming down, or as you just said that the raw material costs have been coming down since past 4 months? So what is the pass-on strategy? How much lag time do we take in passing on those benefits? And is it like because the festive season is around, and so can we see the EBITDA margins going up in the quarters coming by, and then what could be the at the end of the year, what could be the EBITDA margin that we could be able to achieve? Because the raw materials pricing coming down, that's all.
Yeah. Since it's a very volatile this thing, it's difficult to predict, but what on the overall this thing, our as per the previous years, we are generally in this range of 61 to 63%. So that is what we are anticipating, depending upon whether the raw material prices may go up or go down. And so, as I mentioned earlier, we look at EBITDA margin for the year in the range of 14 plus minus 1%.
And sir, what's the plan regarding the borrowings? Because short-term borrowings have shooted up because of this new project that you have and the CapEx that you have been doing over the years.
Yeah. So at the moment, there are no plans of any borrowings for the whole year.
No, I'm talking about the repayment, and also, are you going to use the cash flows to repay that, or
yes,
are you using the same again to do the capex and all those things?
No, at least for 1.5 years, as you said, we'll consolidate and we'll be using less of cash credit facilities.
And what is the lag time? Suppose today I want to increase my capacity, and what is the lag time? How much time do you need to increase add the capacity to the existing capacities in the current business?
If it's a complete greenfield project, then around 12 to 14 months.
Okay, so you don't see any capacity addition in the next coming
marginal with small investment, but not very significant, I will say.
So what capacity you are running it currently, sir?
We are in different processes depending upon, roughly 85-90%. We are there at the moment.
So can we reach 100% in this particular?
Yeah, with certain tweaking, and we are working on increasing the capacities of the existing machines by changing the product mix, by changing the certain mold layouts. So we are also planning to, and we are successful in 1 or 2 projects. So we are expecting to increase our capacities also by 5 to 10% from the existing setup.
Sir, one question I had in my mind is that, when we go to, I personally visited markets and I've checked your product, okay, which is into this, the sheet and all. So how exactly your product is different from your competition? Why should I as a business say, because is it just because you have tie up with that company you are getting the business? How exactly are you penetrating to get a customer? How exactly do you push your product? What is the competitive advantage of our product? Because the thermoforming sheet is same. If I'm not mistaken, you also have one competitor near RNL, I guess, some enterprise or something. So their product and your product, once I see, I don't know the technical parameters, but how exactly are you differentiating your product when you are pushing to a customer?
See, basically, when we talk about different processes, what we have, extrusion, thermoforming, printing, labeling. So one is we have under one roof all the processes which no competition in India is having at the moment, along with the barrier segment, where we are the only one doing the barrier. So that's the advantage that the customer gets when he comes to us. Secondly, we are invested in technology, so we have equipment and hardware which are with better technologies. With many of them are of European origin. With other competitors, they don't have. They are mostly working on domestic machineries, and that's the reason why we have certain customers where we have been supplying to them monopolistically over a period of years, and with a huge set of mold bank, with different product recipes, what we have developed over a period of time, we are able to offer a lot of advantages to the customer into the packaging segment as compared to our competition.
Because in our industry, the end user comes up with newer products, and that is how we get business from them, if I understand it properly.
No, it's not end users, it's the brands. Big brands, it can be.
So Tata, let's say Tata, Nourishco, or whatever it is. So whenever they come up with new products, you are going to get business from them. So are there any new products that are in launch phase and you are being, approached for those? Anything there?
That's a continuous development which goes on along with the existing customers as well as the new customers. So as I mentioned that we have added 79 new customers. So this happens right from a small time startup who has entered into food packaging right up to big companies who are coming up with the new product launches.
Okay, but I just wanted to know this because when you said that you're not going to do any capex for the next 1.5 year, and from there it is going to take another 12 to 14 months, the lag time that you have told. So I expect with this capacity, that means you are actually not going to get any big customers and you don't foresee anything like, is my assumption right in this direction?
No, I will say as I said, we can give an upside of around 15% from the existing setup, which will take maybe 2 or 3 quarters for us to use that capacity in this particular year, and then we can start thinking once and depending upon the growth and demand, we may look at further investment, but we will not like to do it in the same zone then. We will like to do it somewhere in the north or south, depending upon where our customers are.
All right, sir. Okay, thank you.
Thank you. Our next question is from the line of Nagesh Jain from NB Investments. Please go ahead. Mr. Nagesh, your line has been unmuted. The line for Mr. Nagesh Jain has dropped. I request the management we move to the next participant. Thank you. Our next question is from the line of Anant Chenoy from AS Capital. Please go ahead.
Hello. Thanks for giving opportunity again. So my first question is, you mentioned that this year our target is 285 plus minus 5. So you are telling about additional 50 crore top line. So additional 50 crore will take us to 330. So around 330 crore at the standalone level, can we reach without doing any additional capex?
Small capex, I will say.
Okay.
For 3 to 5 crore rupees.
Okay. So that whatever we are targeted this year, 3 to 5 crore capex, that will suffice to reach 330, 340 crore kind of number.
No, 285 for this year, and then that additional capex for the next year to make it 320, 330.
Okay. And other question was on this olive EcoPack. So in this paper-based products and whatever this sustainable coatings that you are telling. So who are the other players in this particular category?
Yeah, there are players like Huhtamaki is one company which is doing it. There is another called DJS Printers which is doing it. So Nippon Paper is another company which is doing it.
Okay. And do you envisage export opportunity in this olive EcoPack? Like you were telling 220, 230 crores. So roughly how do you envisage export in this proportion?
Yeah, we are looking at export of 30 to 40% from olive.
Oh, okay. So already talks are on and we have for that?
Yeah.
Okay, that's great. Okay. And any new update on the tube laminates that we were working on? Has it been stabilized?
No. Tube laminate, unfortunately, I will say we are dropping that particular category because we'll be focusing more on food packaging because there are certain technical limitations in commercializing the production of tube laminates. But there is a huge potential lying in it for future, and we will reconsider it maybe whenever the next round of capex when we'll be doing it.
Okay, thanks a lot.
Thank you. Our next question. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Gurjot Aluwalia, who is an investor. Please go ahead.
Yeah, thanks again for the opportunity. Just a clarification on the revenue guidance. So previous Concall, we had talked about targeting 15 to 20% growth in FY24. So when you say that we should be doing about 285 crore, that's the bare minimum that we are saying this year, and it can like cross 295, 300, or we are reducing the like guidance to maybe 12%, 10-12% growth.
Actually, there has been significant drop in the prices. That is why we are talking of 285. Otherwise, we would have seen 295, 300 crores. So in terms of volume growth, it still remains intact. And based on the current RM prices, and if the trend remains the same, we are talking of 285.
Okay, because I was just doing a calculation with the increased finance cost and the depreciation and like say 13% EBITDA margin, the profitability for the company for this year again will be absolutely flat in the 285 crore revenue, which is okay, but yeah, just want to highlight that from a shareholder perspective, again, they will not see any growth there. Secondly, I wanted to check, when you say in FY25, if we can push with a small capex of 3 to 5 crores, the revenue to about 320 crore, does that include the revenue from Olive Ecopack?
No.
So what kind of potential consolidated revenue could company have in FY25?
I will say 320 from the plastic business and around 60 to 70 crores from olive business.
Okay. So consolidated company will be in the ballpark of around 400 crores. And the EBITDA margin from the Olive Ecopack business, is that similar, better, or worse?
Yeah, it's also in the same range.
Okay. All right. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Nagesh Jain from NB Investments. Please go ahead.
Good evening, sir. Sorry, my line got disconnected last time. The first question is, sir, what is the maximum revenue that we can get it from the barrier packaging machine?
Around 60 to 70 crores.
Around 60 to 70. So I think, if I remember correctly, I think we had done around 20 crores last year. Correct? So this year, how much we are expecting to do in that?
25 to 27 crores.
25 to 27 crores. Okay, that is one. Now, second is in your injection molding business, what is the capacity at which we are running now, or what is the revenue we have got in this?
3.25 crores in this particular quarter.
So that means we may do around 14 to 15 crores for the full year?
Around 12 to 14 crores we should be able to do for the full year.
Okay, so I think you had given a guidance of around 17 to 18.
Yes.
Correct? So that must be close to 80 to 85% capacity utilization?
I will say around 75% capacity utilization will be doing. Yeah.
Okay, so would you be thinking of expanding this capacity?
Yes, definitely. And since here it's on a toll manufacturing agreement, we don't need to invest into machinery.
Correct.
So the investment will be done by the company who is doing it for us.
Okay. No, how much time he would, I think now the existing capacity is only 1,000 metric ton, right?
Yeah.
So how much time he would require, let's say, to double the capacity?
3 months. Because that particular facility has the land, building, everything. To double the capacity, they need to invest only in the machines.
Okay. So that means in the existing space that they are using, our unit 1, so how much they can increase the capacity?
They can go up to 35 crores to 40 crores.
So what you are saying is maximum we can go there up to, let's say, 2,000 metric ton only?
If the machine configuration are different, it can go even up to 2,800, 3,000 metric ton. Depends upon what configuration of the machine we are choosing in the next stage.
Okay, fair enough. So then the third thing is that you had given recently, you gave the revenue guidance for FY25. I think it is close to around 400 crores or something, right?
Yes.
So earlier we had a target of around 500 crores.
Yes.
So now there is a downward revision. Is it purely because of the downward revision in the raw material prices, or is it for any other reasons?
Yeah. From the current stage, we are saying like 20 to 30 crores on the plastic front on the raw material prices. And
okay.
On the paper front, we are little conservative because the overall top line still remains, as I said, to 220 to 30. So if we are able to achieve that in that particular time frame, we are talking about 480 to 500 crores. But if we are little conservative, we'll be at 400.
Achha. Okay, fair enough. So next thing is, in the Q1 quarter, there was increase in the other expenses. So any particular reason?
Yeah. There are, like, I would say, interest cost has gone up by 86 lakhs, depreciation by 65 lakhs, power cost has gone up by 2 lakhs.
Okay.
Which is mainly due to higher tariff at Gujarat and higher consumption of units. And job work expenses has gone up by 86 lakhs. That is as we are increasing the injection molding, and that is under toll manufacturing expenses. And there is some marginal increase in the transportation. These are the major reasons for the increment.
Okay. Sir, regarding barrier packaging, you said that we would do around 25 to 26 crores during the year. This is roughly around maybe 35 to 40% of the actual capacity of the machine, the utilization. So the first reason is why is the response is not that good? That is the reason for the underutilization of this machine?
No, originally also this was planned that we will use 50% for non-barrier and 50% for barrier. So that's how it was planned. So we are reaching 35-40%, I would say, in 3 years' time. And as I was mentioning about, as the market grows and if the product mix changes, since barrier has a higher margins, so that will also help us in improving our profitability. So this segment is growing at a good pace. So if we are able to utilize the full capacity over a period of time, that will help us increasing our margins. But the machine is utilized completely, but it is in the mix of non-barrier and a barrier as a segment.
Whatever the new customer that you have added, is it in only the sweet segment only?
No, it's both sheet as well as packaging product. I would say more in packaging products.
Both packaging. Sir, this barrier packaging is supposed to have a good demand in the export market. Could we able to tap that potential?
Yeah, we are doing exports to 2-3 countries currently, and we are focusing more on exports. So that has also helped us in increasing our revenue in this particular quarter. So we are working on it, but as I said, like, it has a little more validation time. But we also see a good demand for this coming up in India also, and it is growing gradually.
Okay, fair enough. So regarding the capacity, I know you have, one is the extrusion capacity, the other one is the printing capacity. Now this extrusion, is it running at 80 to 85% capacity?
Yeah, around 90%, I would say it is running at around 90%.
including the barrier capacity where the rest of the facility you are using it for the normal products only?
Yes, yes.
So in spite of that, you are running at such a high utilization?
Yes.
So that means then you may have to add some capacity by the year end?
No, we don't see major capacity expansion on the extrusion front as such. As I said, like we are working on to improve further on the current set of machines by tweaking few things. But only thing is we will invest in certain ancillaries and certain add-ons, but we don't foresee any major addition into the extrusion machines or such things.
Okay. So as and when the demand demand necessitates you to put additional capacity, do we have space in the existing factories?
Yeah, we can add one extruder and around 3 to 4 forming machines and 2 to 3 printing machines in the existing place if required.
So one extruder means how much? What would be the capacity of that?
Again, depending upon the output, but roughly 4,000 tons a year.
And since it is a brownfield, you can do that within 3 to 4 months only?
Extrusion 4 to 5 months.
4 to 5 months. Acha. Okay. Sir, and lastly, you had mentioned that you are also looking at putting up a greenfield in either north or south of India. Would that be also somewhat similar to the tall type of arrangement that we have for the injection molding?
No. That will be. It is just a thought at the moment. There is no decision on it. But as and when next round of expansion happens, we will look at an alternate location. But it will be purely under Rajshree umbrella.
Okay, fair enough. Okay, sir. Thank you very much and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Mahesh Attal from Attal Advisories. Please go ahead.
So thanks for the question, sir. Sir, just on this EcoPack thing, what is the size? What is the cost of machine that you are going to have? And I'm asking this because just wanted to know the turnover from that machine. So, what is the share? Like as of now, we have paid 16 crores. Further, how much we need to pay? And what is the cost of machine? Because that's very important. Because I just want to know because you said 230 crores is the turnover capacity. So what would be the turnover? I mean, number of times we can do the turnover. Asset turnover, yeah, that's what.
Roughly 3x we can do, so around 60 to 70 crores is the cost of machinery.
So out of this, we have paid 16 now, so we need to pay further 16, right?
No, see, it's a JV project, so we have to pay another 6 to 7 crores. So around 45-50 crores is through both the JVs, and around there is a loan balance is coming through the bank loans.
So who is the other partner in this JV?
Mr. Rajesh Gandhi.
What's his expertise, sir?
They are also into packaging, but they are more into exports and general market sales.
Okay. I mean, any idea why the company has been, going with him? Like any synergy that you see, or is it just that you wanted to go there so that you?
No, it's basically both the groups have different expertise and in their field. So if we add on those strengths, it gives a good benefit to the JV.
And what is the time that you will take? Like for example, if you're really optimistic and you may reach 230 crores in the first year itself, how much lag time to add another machine in the EcoPack?
Machines can be added within 4 to 5 months time period.
Okay. So do you see the visibility of it achieving 230 crores in the first year itself?
No, I will be realistic. But reaching 230 crore in first year is not possible.
Okay. So 2 years. I mean, 2036 we can expect it to be there.
Yeah.
And what is the first quarter? I mean, I think in December you are going to commercialize that.
Yeah.
So can we see any numbers?
Some revenues in quarter 4 coming from on.
How much that could be?
We should look at least 10 to 15 crores in that particular quarter.
So what is the break even for this particular project, sir? At what turnover it might break even? Because
I will check that number and let you know. I'm not having that number in front of me right now, but I'll just check and let you know.
All right, sir. All right. Thank you.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you very much, ladies and gentlemen, for all your questions. I hope I have been able to answer that to your satisfaction. Thank you very much for joining us today. I will now like PL to take over the call and conclude.
Thank you. On behalf of Prabhudas Lilladher Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.